You won't believe the numbers AMD just put up in the AI market, and they're now expecting over $5 billion in AI chip revenue for this year. Unfortunately for Intel, it wasn't as good. But before we get started, check out the pinned comment for special offers at fool.com/Jose and a coupon for my semiconductor earnings book.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, let's dive into this AMD versus Intel showdown from their latest earnings. Both companies just reported, and there's a lot to unpack here. First up, let's talk about the elephant in the room, and that's the AI and data center market. This is probably the most exciting battleground right now. AMD absolutely crushed it compared to Intel this quarter, with their data center revenue hitting a record $3.5 billion, up 122% year over year. Lisa Su mentioned that they're now expecting to exceed $5 billion in AI chip revenue, up from their previous guidance of 4.5 and their original guidance at the beginning of the year of roughly $2 billion. On Intel's side, it's a bit of a mixed story. Their data center and AI segment brought in $3.3 billion, up 9% year over year. But their AI accelerator program isn't quite hitting the mark they hoped for. Pat Gelsinger actually admitted that they won't hit their $500 million revenue target for Gaudi in 2024. Their traditional server business showed some improvement though, with data center revenue up 10% sequentially as demand for traditional servers picked up. But we can see it's quite a contrast compared to AMD's explosive AI-driven growth in forms of AI accelerator revenue. Now in the broader server CPU market, both companies are fighting hard. AMD CEO Lisa Su mentioned they gained server CPU share this quarter, with strong adoption in both cloud and enterprise. They just recently released their new Turing processor. Intel isn't sitting still though. They just recently launched their Granite Rapid Xeon processor, which they say doubles the performance of the previous generation, and Pat Gelsinger emphasized that they're still dominant in AI server head nodes, with over 70% of servers using Intel Xeon as the host CPU. Now let's talk about guidance and some headwinds both companies are facing. AMD is guiding Q4 revenue to be approximately $7.5 billion, which would be up about 22% year over year. Pretty strong. Intel is guiding for $13.8 billion at the midpoint, but here's where it gets interesting. Their gross margins are expected to stay under pressure at around 39.5%, a lot lower than AMD's kind of gross margins, which we'll look at later on. If you are enjoying the semiconductor content, check out my pinned comment below to get $10 off my Q3 earnings ebook. Better yet, if you do purchase the Q3 using that coupon code, you also get Q2 earnings ebook for free, so you can see what last quarter's earnings were about and kind of understand how the market is evolving. Check it out at moresemiinvesting.com. And also check out my Substack if you want the written content for this episode. And speaking of margins, there's this fascinating dynamic playing out with the manufacturing. You see, Intel has been using external foundries like TSMC for some of their products, kind of a necessity while they've been getting their manufacturing back on track. But here's where it gets good. Pat Gelsinger talked about them bringing wafers home strategy. For example, with their upcoming Panther Lake product, Pat mentioned more than 70% of the silicon area is back in-house. This is huge because every wafer they bring back internally should help their margins. Their Nova Lake desktop chips are following a similar path, though they're keeping some flexibility with external manufacturing. Now let's talk about the PC markets. Both companies are betting big on AI PCs. Intel is targeting 100 million AI PCs shipped by the end of 2025, and AMD's got some serious momentum with their Ryzen AI processor. AMD's client segment revenue was up 29% year over year, while Intel's was actually down 7%. But let's be real, both companies have their challenges. For AMD, their gaming segment revenue dropped pretty hard, down 69% year over year to $462 million. That's mainly because Microsoft and Sony are reducing their inventory of console chips. Their embedded segment is also facing some headwinds, down 25% to $927 million as customers work through inventory. Intel's got their own set of challenges. Their CFO, Dave, dropped some pretty interesting comments about 2025 margins. They're expecting margin expansion to be muted in the second half of 2025, especially as they ramp 18A production. They're also taking some big restructuring actions. We're talking about reducing their workloads by more than 15% and trying to cut costs by over $10 million. Another interesting wrinkle is the memory market. AMD's Lisa Su mentioned on the call that even though there is strong demand for AI chips, the high bandwidth memory supply could be a limiting factor. She said, and I'm quoting here, "We feel good about our overall supply chain capability, but reading between the lines, this could be a constraint for the whole industry." Looking at the overall financial picture, AMD was pretty solid. Revenue was up 18% year over year to $6.8 billion, with gross margins at 54%. Intel, while they had a rough quarter, revenue was down 6% to $13.3 billion, and they took some massive charges that impact their profitability. Let me share some key quotes here. Lisa Su said, "Looking out over the next several years, they see significant growth opportunities across our data center, client, and embedded business, driven by nearly unsustainable demand for more compute." That's pretty confident for the overall AI market. Pat Gelslinger was more focused on restructuring and efficiency, saying, "We have a lot more ahead, and we are acting with urgency to deliver on our priorities. We need to fight for every inch and execute better than ever before." So when I look at these stocks, yeah, I still prefer AMD right now. They seem to be executing better and have fewer moving parts to worry about. Intel's story is really interesting though. If they can succeed successfully bringing those wafers back home and ramp up 18A successfully, their margin story could improve dramatically. But we're probably talking late 2025 or even 2026 before we really see that play out. The bottom line, AMD feels like a safer play with clearer near-term catalysts, while Intel is in the deeper turnaround story that could have bigger upside if, and is still a big if, they execute well both on their manufacturing transformation and AI strategy. Just remember, this isn't a zero-sum game. The AI compute total addressable market is growing so fast that both companies could win, just in different ways and on different timelines. Right now, AMD is sitting at a stock price of about $148. I personally am enjoying this price point, and I've done a video earlier this week or a few days ago where I mentioned AMD is one of my top buys. And year to date, the stock is up roughly 6.7%. I believe the market is underestimating AMD's potential. Now, Intel stock right now is sitting at $26.20. Year to date, the stock is down roughly 45%. Like I mentioned earlier on, this is a story that definitely has growth opportunity, but a lot more risk. I am a big shareholder of AMD, but do not own any shares of Intel. Well, that's it for today's episode. Take care and see you for more semiconductor and AI news.